We move now to services, and we start by listing the main categories of services. So we have manufacturing services to improve some products, for example, maintenance and repair services, to similar but to not to improve the goods, but just to maintain or repair them. Then you have transport, travel, construction, of course, financial services like insurance, pension services, financial services, including FISIM. FISIM is essentially the statistical recording that covers, that transforms interest into the recording of a service, while otherwise interest would be income. But presumably this was covered by another presentation. I don't go into details. Then charges for the use of intellectual property, telecommunication, etc. We give you here an example of the exports and imports of services by the euro area, just to give you an idea of the main components. So as you see, for the credit, so the exports, transport, travel, 17% each are the biggest, the largest components. Financial services, 8%. Sorry, I forgot telecom, computer and information services, 16%. So that gives you an idea. Of course, other business services, so covering other items, so there is still quite some diversity. And in the imports, it's a bit similar, with a significant role of this red part, charges for the use of intellectual property, 13%. And that's for 2018. A few words on a couple of specific components. So first, transport services. Quite intuitively, this includes air transportation, sea transportation, and other, especially, of course, transportation via roads and railways. And of course, you can distinguish also transport of passengers versus freight. Travel services now, this one maybe is a bit less intuitive. So this covers expenditure by residents of one economy that are traveling in another economy. And therefore, it covers both goods and services for own use and to give away. And therefore, it is not a specific type of service, but an assortment of goods and services. So assume you go to Brazil to visit Brazil, you buy food there, you buy, you go to museum, you buy a postcard to send a postcard to friends in the euro area. All these would be, in principle, recorded as travel, even though this is not just the price of your flight to Brazil, but also the expenses that you do on site. So with this, we now move to primary income, so the next component. There, maybe it is useful already to distinguish primary income from secondary income. So primary income is essentially the return that accrues to institutional units for the provision of essentially labor and the provision of financial assets, and last also for renting natural resources to other institutional units. So basically, somebody gives a certain resource that will be used by some institutional units in another country, and this is then, this gives rise to a certain payment, certain return, and this is what we call primary income. Secondary income has to do more with redistribution of income via essentially transfers, current transfers, the one essential actor there is then government. And or maybe just that you may take note that primary income was introduced as a term in the BPM 6, so the 6th edition of the IMF manual. In the 5th edition, it was in concept also there, but there was different terminology. So, as we said, primary income covers provision of labor, financial assets, and then I didn't highlight also taxes and subsidies on products and production, and rent related to non-produced assets, because if you rent a produced asset, like a building, it will be a rental, it will be included in services. So, provision of labor is recorded as compensation of employees, the term being a bit broader than wages because it covers also other components. The provision of financial assets gives rise to investment, so-called investment income, and the other components are in other primary income. Of course, you record credits and debits similarly to what you do in goods and services. It's a gross recording, not a net one. So if you buy and sell, to non-residents, you record two transactions, not just the net of the two. And it is accrual recording, so not cash recording. So, for example, if you are paying interest for you have a debt and you pay interest to a non-resident, you would record this depending on the number of days where you had your debt, not depending just you don't book only the payment at the day when you pay the coupon.